So yeah, I'm going to talk to you a little bit today about Tandem, about me, about banking in general. I'm going to talk about disruption or lack of it, and why I think banking has not yet been disrupted. I'll try and put a figure on banking disruption towards the end, and maybe we can talk about that. So a little bit about me. So my background isn't banking. I came to banking quite late. I've only been in banking for the last 3 years. Prior to banking, I worked at these companies. And for those of you who are alive, you've probably heard of the BBC. For those of you who are British, you've probably heard of Channel 4 and ITV. They're the largest media companies in the UK. And my job was to help these companies build video on-demand platforms. At Channel 4, we did it first back in 2007. We called it the glass-to-glass system, so from the playout decks all the way out to the customer. And why this is interesting or important, or why I think this is useful in this discussion, is that I've seen disruption done. I've seen it done firsthand. I have been part of disruption. I took something that was very, very staid, very well understood, had been the same for about 50 years, and turned it on its head. It used to be the case that you had event television, everybody would get around a TV, they'd all watch the same thing at the same time, they'd go into the office the next day and they'd all talk about it. And through 4OD, through BBC iPlayer, and through ITV Hub, that got turned on its head. And streaming services were introduced. Everybody had a screen in their hands, phones became screens, everything became screens, everything's a screen. And so therefore you watch what you want to watch when you want to watch it in the manner that suits you the most. I mean, that's disruption, really, really turn things on its head. And then I came to banking. I came to banking and I didn't actually go directly to Tandem Bank. I got headhunted out of ITV, where I was the digital CTO at ITV, and went to HSBC Bank. And then I went to Tandem Bank really quickly after that. Tandem is a technology company. It's a data company. It's a technology company. It's an AI company. We have standard sets of products. We have savings accounts, both fixed term and instant access. We have credit cards, a prime card and a near prime card. We do mortgages. We do loans. We do all the things that banks do. And we're doing pretty well at it. We have made pretty good revenues last year. We expect to be profitable towards the back end of next year. So things are going pretty well at Tandem. And Tandem is one of those banks that's disrupting the banking sector, except we haven't disrupted the banking sector. And I'll talk about why I don't think we've disrupted the banking sector and why I don't think anybody's disrupted the banking sector yet. Oh, wrong way. I told you technology was my thing. So if we're not disrupting it and others aren't disrupting it, then what's going on in the banking sector? So, you know, we can definitely say that this is happening. Better UI, better tech. We can definitely say that, you know, the ability to attract customers is successful as well. If you think about the likes of Monzo and Starling, think about us, think about N26, Chime in America, that sort of stuff. We can definitely say that these things are happening. We're doing better UI, better tech. But are we profitable and are we disrupting? I would argue not yet. I mean, Tandem is pretty close. But we had a kind of slap your forehead moment earlier this year, beginning of the year, where we realized that all the things we thought we were doing to disrupt banking, we weren't doing at all. And back to my experience of television, you know, when we were disrupting television, we really knew it. We were like, oh my God, this is so different. But banking, not so much. So better UI isn't disruption. I mean, I really want to make this point quite strongly. What you know, these banks that are doing better UI, they're taking something that already exists, taking a current account, taking a savings account, taking a loan or whatever, and they're making it much easier to apply for. They're making it much easier for you to go through and get that product. And when you come to use that product and get service for that product, it's a much better experience. And God knows the world needs a better banking product. I mean, you know, you look at the likes of the incumbents, and the experience is pretty shite, to be honest. But this is a really, really low moat. This is not disruption. You know, everybody can do this. All it requires is to think a little bit harder about how you organize your teams, think a little bit harder about how you engage with the customers, think a little bit harder about how you do design and how you test those designs with your customers. Everyone can do this. This is like not a defendable thing. This is just Uberization of banking. This is just sticking a better UI on a current account. Not disruption. This also is not disruption. So for those of you who are British, you'll know that in the UK we have all these entities that allow you to go on and find, put in all your details of your house or whatever and find a better deal for your electricity, find a better deal for your car insurance. These aggregators, they aggregate together all the financial services that you might need, and then they find the best one for you. This isn't disruption, even though some of the banks are trying to do this. Starling, notably, are trying to do this, because these guys up here spend literally hundreds of millions of pounds in above-the-line advertising campaigns to try and get you to go to their websites. And the conversion funnels on these things are absolutely tiny. And so, for every pound you spend to try and get somebody through into a paid product, it's really hard. I mean, we're talking like tens of thousands to one, thousands to one kind of ratios to try and get people through. So, although some of the banks are doing this and they're saying, hey, we'll better find you a better energy deal. I mean, we did this. Tandem did this. We did it. We aggregated everyone's bank accounts together. We looked at their kind of discretionary spend and their committed spend. We found all their energy bills, and we said, hey, would you like to switch energy supply? And guess what? Nobody did it. We tried this. This isn't disruption, and we switched it off. We threw it away. And this isn't disruption either. Better tech. So you'll hear a lot of people talk about, well, it's easy for you challengers because you don't have to deal with all the legacy that we have to deal with. You're really, really lucky. But this isn't disruption. We choose to integrate together a bunch of products. Other people, Monzo notably. I was talking to the lady from Monzo, Rona. Oh, yeah. They tend to build everything themselves. You can choose either approach, but again, it's not disruption. This is just an enabler. This is table stakes. This is what everybody does. This is what Uber does. This is what Facebook, Google, those kinds of people do. We do all these things, microservices, DevOps, CI/CD. We have kind of really healthy discussions about tech debt versus new product features. We try to keep the code base healthy so we never get into that kind of legacy situation. But this isn't disruption. This is just like any modern tech company would work. So as I said, having worked in television and seen disruption done firsthand, I look at some things and go, yeah, that's definitely disruption. Everybody can agree that Airbnb has disrupted the hotels market by inventing an entirely new class of product, which is like your room in your house or someone else's house. Uber, Spotify, Netflix, even though these guys are piggybacking off the work I did back in 2007 when I built 4AD, but it is all disruption. So old things in new ways. But banking is old things in old ways still. The way you make money as a bank fundamentally has not changed. It is still the difference between what you pay your depositors against what you pay your borrowers, net interest margin. Okay, so I've told you what I think disruption is not, and now I'll talk a little bit about what I think disruption could be. And hopefully, well, let's see. Maybe you'll agree with me, or maybe you wouldn't. So I would argue that the mental models around banking have not changed for, 1,000 years. Somebody here is probably a historian of banking. But when I did my kind of brief Google search, and this one you can safely Google search, you're not going to find any dodgy things like what happens every 6 minutes. But if you go and search this up, basically it was the Venetians or it was the Knights Templars that first set up the first banks. I think the Knights Templars did it to fund the Crusades in the Holy Land. But for about 1,000 years, more or less, people have thought in terms of products. I will have a savings account because I have an excess of money and I want to put it somewhere and get a return on it, or I will have I will get a loan because I have a need for money, and I will get money from somebody and I will pay them interest for that loan, and the bank sits in the middle and arbitrages that and kind of sends it all out. So the mental models of banking hasn't changed. So I would say one of the reasons that banking has not been disrupted is that the mental models of disruption are so deeply embedded in people's minds that to actually shift people away from that is almost taking them too far. And I think that's one of the challenges that we all face when we come to disrupt banking. So the mental models of banking haven't changed in centuries. And what that means is that people are kind of stuck on their own when it comes to their finances. It used to be the case that you'd have a bank manager, and this might be true in some other countries, but in the UK certainly, for most people these days, they don't have a bank manager. If they want to do something with their finances, it's up to them. And a very interesting question that we ask some of the sort of younger members of staff when we recruit them is, if you had an event happen to you and you had to go and finance to pay for that. So like your boiler blows up in the morning and it's the middle of the winter. What do? Do you go and get loaned? Do you go and get an overdraft? Do you go and get a credit card? It's very interesting to see what people say. They're stuck in these mental models that they need a certain kind of product. And this is a fantastic trick that the banks have played on customers. It turns out the banks are full of people who are really good with money and understand banking really well. And it turns out the customers of the banks tend to be people who aren't so good with money and maybe don't understand products so well. And guess what? It's the customers that have to pick the product that suits them. And if they get it wrong, then the bank makes money from it. So the banks are quite happy with that. But it's not a very nice situation. In fact, people kind of exist in a state of one of two states. They either need money or they have an excess of money. And those things tend to happen over time scales, short, medium, and long term. So you could think of a need for money as being an overdraft to get you through to the end of the month, or it might be a loan to pay for something over the next few months, like a holiday, or it might be a mortgage to pay for something over a number of years. And equally, they might have money, and they want to put that money away for a period of time and get an interest rate for it. Previously, as I kind of pointed out, it's been the responsibility of the customer to make those decisions. But I believe we are standing at a point where, for the first time ever, we will be able to disrupt banking and do away with financial products. And it's for three things have enabled this that didn't exist a few years ago. And they're written up there: open banking, big data, and AI. I really believe that a combination of those three things will allow us to look at customers' finances in a way we've never thought about it before and be able to create a new abstraction on top of the products that customers have been used to that will help them manage their money. So you think about something like collections. So we're all in banking. Collections was a new thing to me when I joined banking. I didn't realize there was this whole industry called collections. And what happens is you take out a loan, it's for a period of time, say 48 months. You pay back an amount of money every month. And if you miss payment for 3 months, you get pushed into collections. Well, that's kind of nuts, because if you could see customers' full financial history, if you could see all of the accounts they had and all the money they had, if you could aggregate that together into a massive big data system, and if you could apply AI over the top of that to model that customer's behaviors, like all other customers like them, you might work out that rather than pushing them into a very expensive collections process, you might instead just lengthen their loan, or you might reduce their interest rate for a few months just to help them through that little period and then get them out the other side. You might then see them have a bit of a windfall later on and suggest that they move that money from their savings account or the place where they have money into the place where they don't have money, so they can even things out. So I think open banking, big data, and AI will fundamentally disrupt banking, and it will do something which is really interesting. It will make banks less profitable. As we kind of go into this kind of idea where you kind of wander into Apple and you make a big purchase, and then you realize, shit, I'm not going to make it through to the end of the month. And you're like, well, no worries, we'll just kind of put that, we'll either push it out to next month for you, we'll move it by 4 days, or you can pay it back over 3 months, and if you struggle to pay it back a bit, then we can kind of dynamically flex your loan. It will help customers because they will have less financial penalties. And so consequently, the bank will make less money. But that, for a bank like Tandem, isn't an issue because we have such astronomically low operating costs that we can afford to give people really, really good value for money. And we have a platform that pretty much we can scale it non-stop. And the more customers we put on it, the incremental cost of each customer is next to zero. It's all elastic. It's all in Amazon. We can make this really work very well for the customer and for Tandem. And by making it work well for the customer, by helping customers with their finances in a way that really hasn't happened since the 50s in the UK when people had bank managers, they'll go and tell their friends, and their friends will tell their friends, and you'll end up with word of mouth. This idea, we call it the cash flow bank. And this was the kind of dolt moment that we had earlier in the year when we realized all we'd done was built a set of products that were kind of a bit better than the incumbents' products, but certainly weren't as good as sort of Monzo's current account. And we're like, oh, God, we're really not disrupting banking here. What's going on? And we got ourselves together and we realized that all we had done was just built a new version of an old thing a bit better. And what disruption in banking needs is to really rethink how customers engage with banks and with products so that it is a truly disrupted experience in the same way as television got disrupted or in the same way as Airbnb disrupted hotels. So I said I'd start out at the beginning, and I would give you what I considered to be the percentage of disruption happening in banking. So it's that. I don't think disruption has happened at all yet in banking. I think the things that have been done around better UIs and better acquisition journeys and really kind of looking at how good digital products work in other sectors and taking the best learnings from that and applying it to banking has been very, very successful. And I think you only need to look at Monzo's 3 million customers, likewise N26, to see that there's a real desire for that better UI, better experience out there. But fundamentally, as a disruptor of industries, I think that we haven't done any disruption yet. But the good news is we are standing on the precipice of that disruption. And you people in this room, and me and other people that are thinking about banking disruption now have the tools to go out and finally disrupt banking. And amongst us, one of us, or maybe a new company will come through that we don't yet know or haven't yet heard of, will come through and come up with a service which resets in customers' minds what bank means and what product means, and create a new abstraction on top of banking which will fundamentally disrupt it, and they will win. And the question mark is, who is that person? Are they in the room? Is it me? Is it you? I don't know. But I don't think it's been disrupted at all yet. Thank you very much.